The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hi there, welcome to the COB. Nice to be here with you. I'm Nadine Blaney. We'll bring you analysis of the day's trade throughout the next 20 minutes or so as we wait for the last of the day's trades to go through this market on this Monday, the 29th of April. Nice to see some green on the screen. Has to be said, with the COB Australia Index, a little bit of selling into the close, but looks like the curtains have come down, with that index up by about 0.7%. We do have the last trade still going through the ASX, but in terms of sectors, 10 out of the 11 sectors were higher. I'll detail that in just a moment. But yeah, we've got this not just recovery here in Australia, but around the region as well. So green on screen when it comes to many of the region's major markets, and that includes the Hang Seng, which is headed toward a new bull market. I will say, though, that the Japanese bond market was closed today. We are getting reports right now, however, that there has been some sort of intervention in currency markets in consideration of the steep falls that we've seen in terms of the yen today. No confirmation comes from the Ministry of Finance there until tomorrow. We haven't seen any confirmed reports coming through, but that's what is being told has happened, considering some of the sharp moves that we did see in the yen through this Asian session. Who's the boss? Well, one of the best performers today was Boss Energy, moving into production, putting out its quarterly production report. We're in that season right now. I've had a few of them on today. But yeah, Boss Energy is one of those companies that will get you across the corporate news. And this is a big week. Look, we've got the FOMC, so the Fed's decision coming through in the United States on Thursday. We've got the US jobs read, we've got housing data coming here in Australia, but tomorrow we get a retail sales read. That will be interesting. We are expecting to see a little bit of a pullback. We did have a bit of a Taylor Swift, what do you want to call it? A bit of a Taylor Swift bump happening in the months of February and March. So we'll see what comes to fruition in the most recent retail read. But with all of the talk of pain in the consumer space, all the talk about rates possibly remaining on hold through 2024 will be very closely watched by the market. All right, speaking of the market, let's get to some of those sectors that outperformed or underperformed today. And REITs, an interest rate sensitive part of the market, pushed higher today. REITs up by close to 2%. I'm putting up 1.5% according to ASX data over the past 5 days. Infotech, better day there as well. It was one of the best performing sectors. We had telecommunications looking pretty good. Infotech was up by 1.7%, and some good strides being made by the likes of NextDC. I spoke with Raymond Chen from Morgans about NextDC in particular. They have an ad recommendation and a price target of $19, but I would encourage you to go and listen to that interview to get the details of the thesis, the investment thesis that's pretty positive for NextDC when it comes to the coming years, multiple. We've got TPG in focus. TPG signing a deal with Optus over regional networks, so we'll keep an eye on that one. But good things happening there for its share price, up by 4.8%. And Aussie Broadband's up by 1.4%. I did say Boss Energy was the best performer on the 200 today. Its first quarterly report since beginning uranium production at the Honeymoon project in South Australia. So yeah, market rewarding that. Also, you've got to point to the price of uranium as well as being a tailwind there. SiteMinder had a quarterly update out. Third quarter revenue up 23%. ARR, that's the holy grail, up by 25% to over $187 million, and the shares being rewarded there. Mentioned TPG Telecom and its regional network sharing agreement with Optus. Incidentally, Optus's parent company Singtel did write down a lot of the value of Optus's woes today at its results in Singapore. And Star Entertainment changes at the board level and reaffirming that it's looking for a new CEO. So we've got Chairman David Foster stepping down. Anna Ward has been named interim chairman, picking itself up the mat today, but still, it's a 3-cent share. And we had Megaport confirming its revenue targets. Also, from what I saw, upgrading some of its outlook. Still, though, share price reacted negatively on a day that a lot of other tech was up significantly. So let's check in with our guests on the call today to see what they had to say about the stock of the day, which was Megaport.
Where people are taking a few profits, probably selling off a little bit and keeping the rest to run, because it is a very well managed business. We still like it. We've got a hold recommendation on it, and that's part of because the share price has been so high. So if we do see some further weakness, it may well present an opportunity to buy it at a cheaper price.
A bit more downside to go, but I think you're starting to pick it up. You're not going to get too much fundamental updates from these guys, especially now they've come in with that really refined guidance. So you're probably not going to get, you've probably got between now and August to get this stock on. So hopefully you can get some weakness in the share price from now and there.
Yeah, a bit of a buy the rumor, sell the fact happening there for stock of the day. That was David Lane from Ord Minnett and Josh Barker from RiverX. All right, now let's get to my guest and former colleague, Kyle Rada, who's joining us from Capital.com. Hey, Kyle, nice to see you today. Maybe I'll just go to that story about some intervention in the currency markets coming from the Japanese authorities. No official, obviously, media reports confirming that intervention, but is that what it looked like to you?
It's hard to say. I mean, we haven't, again, seen any news hit the headlines or any real speculation. Of course, we're dealing with a market that's closed, as you said before, fairly thin, so any move is going to be sort of compounded. But the noteworthy elements of the story is obviously it moved 5 handles in the space of about an hour, which was quite remarkable. And from what I understand, volumes for the day were up, basically 3 or 4 times what you would typically expect, especially given that Japan is on a public holiday. So there's some smoking guns there, possibly waiting for some clearer signals. At the moment, we do have the currency back towards 157 when I last checked, or around that kind of a mark. I guess the interesting element is that if we have seen intervention, I mean, the question is how significant it happens to be in the long run, and how influential it will be towards, reversing this trend in the USD JPY. And it would appear to me that really it's quite a piecemeal effort for as long as there are these, significant policy differentials between Japan and the United States, and obviously the risk that we've got higher for longer interest rates in the United States, and policy remaining around these levels in Japan, or at least maybe a couple of rate hikes this year, but certainly nothing to sort of reverse this significant trend. So one worth watching. We'll continue to keep an eye on sort of the price action, because it may continue to be choppy, at least as we get into sort of European trade, when things start to become a little bit more liquid again. But again, it has a hallmarks of potential intervention. It's just not quite clear or confirmed yet from any authority that that's been the case.
All right. What about performance on equity markets today, Kyle? Pretty positive around the region.
Yeah, super positive, and I think we can chalk that up to Wall Street's lead. I think the interesting development last week in terms of, I guess, the broader sort of market strategy point of view is how solid US tech results were overall, and almost again for a second, maybe third straight quarter, the fact that some of these big tech names is salvaging what would have otherwise been a fairly tepid earnings season for US companies. So if you sort of take a look at FactSet data going back a fortnight ago, you'd had the blended earnings estimate for Q1 close to flat, if not slightly below 1%. But with some of those major tech companies, especially, they obviously are spread through the IT sector, but also consumer discretionary and communication services. They've all boosted quite significantly now, and we've got the blended earnings estimate above where it was at the start of the reporting period at the end of March, which again is all to say that there are these kind of hopes that maybe, even if it's lacking a little bit of breadth, US earnings is looking reasonably robust, and perhaps reflecting and offsetting reflecting the strong economic fundamentals, and then offsetting some of the impact of interest rate cuts coming out of the market. So clearly we haven't been able to regain the full sort of the depth of losses that we sustained on Friday on the ASX. But certainly maybe that narrative about resilient earnings is starting to boost market sentiment again. And of course, we have seen US equities off their lows from a week ago, and seemingly Asian markets following suit. Not worth mentioning too, the Hang Seng up 20% from the lows as of its lows earlier in the year today. So some sort of green shoots potentially. It sets up an interesting week, of course, because we do have these Apple and Amazon results going into the Fed meeting on Thursday.
Yeah, it's going to be such an interesting week. Took the words right out of my mouth. So what we do know then is that while the bottom may be in, let's just say could be, the worst of the correction could have happened. Shane Oliver from AMP was calling it a correction and saying, yeah, he thinks it probably has. Even putting that to the side, Kyle, there's going to be volatility, and that's what we just have to be aware of and cognizant of and planning for as investors.
Yeah, and it's going to come from rates volatility more than likely. We have seen the MOVE index pick up a little bit over the last couple of weeks, subsiding, of course, last week as well. But, I think one of the things that is starting to become clearer from central bankers, as well as, market commentators as well, is that this sort of confidence about maybe what's driving inflation, and then obviously subsequent to that, the inflation outlook has become, far less certain. So if that's the case, and we've got policymakers as well as market participants losing confidence in their ability to sort of, forecast inflation, price in inflation expectations, and the risk, obviously, in Australia, for example, that we might even get further interest rate hikes, if not at least interest rates higher for longer. That uncertainty is going to permeate the bond market. That's going to permeate equities as well. And it could mean that, the kind of very smooth uptrend that we saw in the first quarter investors might find it difficult to sort of renew that uptrend until, again, we start to get a better sense that inflation is moving back to target, and again, interest rate expectations are a little clearer. So, yeah, volatility does seem to be the name of the game at the moment. Of course, it seems that this period of rather low volatility through the first quarter is unlikely to sort of be restored anytime soon, and we of course look very carefully for those future inflation numbers and growth numbers out of the United States to get any sense whether this kind of uncertainty about the rate outlook is dying down and provides that kind of boost to risk appetite, or whether we're going to have a sort of protracted period of fairly significant bond market volatility, and again subsequently equity market volatility as well.
All right, interesting times, Kyle. And just a quick thought on retail sales. It's not a market mover usually. I mean, yes, we take it into consideration when we're talking about retailers and the like. But, you've got to think this time there's going to be a lot of attention paid to it because just what we're talking about, these interest rate dynamics, interest rate cuts potentially being pushed out to next year, but still a suffering consumer.
Yeah, exactly. And I think the difference between Australia and the United States is clearly that kind of fundamental strength in the consumer powering the US economy along. But in Australia, a slightly different scenario where we have strong demand on aggregate, but a lot of that is, of course, being driven by immigration and the flow-on effects from that, and not so much because households are feeling in a particularly positive position, certainly going out and spending in quite the kind of robust ways that they are in the United States, which creates a little bit of a conundrum for the RBA because naturally they'll want to respond to domestic economic conditions and not put any additional strains, add any additional risks to the economic strains on households, or add any additional risks to the economy. But in saying that too, we're going to be very, very sort of cognizant of any sort of upside surprise in retail sales. We've already seen, as you said before, rate cut expectations being dialed back significantly, and the possibility of a hike being priced in for this year as well. So an upside surprise could certainly upset the apple cart, but we're dealing with a very, very kind of patchwork economy in Australia. An invidious situation likely for the RBA having to try and balance just the different stakeholders in this. But for the time being, it's certainly one that, while not as significant as the retail sales figures in the United States, a potential volatility risk going into next RBA meeting, which is only, of course, sort of a week away or so now.
Oh my gosh, thanks for the reminder. Thanks, Kyle. You come in handy sometimes. Really appreciate it today. Capital.com. All right, let's get across the market leaders now that the market settled. And nice to see Boss Energy. We detailed that already. Chalice Mining is up on the list as well. We've got Liontown Resources putting on a pretty hefty, close to 7%. It's come out with its update on Kathleen Valley, saying that the lithium project is over 85% complete, and Insignia Financial up by about 6% today. Board renewal plans being released to the ASX, but it's been mentioned by a lot of our analysts lately, including today by Morningstar. Let's get to the laggards though, and that is that stock of the day, Megaport, buy the rumor, sell the fact. A bit of profit taking happening there. Perhaps Karoon, where the oil price goes, so does Karoon Energy. And I'm interested by the fact we've got Light & Wonder and Aristocrat on the list of the underperformers on market today. So yeah, Jeffrey's saying that Aristocrat's recent acquisition of NeoGames will give it the technological capability to compete in the online gambling space, though unclear whether the investment in the sector will ultimately pay off. There's a bit of food for thought for you there if you want to go search out that Jeffrey's note. Hard to get your hands on though, I must say. When we get to the COB, Experience Co. What happened with Experience Co? I'm going to just put that in to my list right now and see if there was news, of course, up by 20%, the announcement of a strategic review as it's released its fourth quarter trading update. Veeam on the list as well, up by 13%. And on the flip side, bit of a motley crew of names here as per usual. Tonight we get inflation data coming from Europe, a bond auction in Italy, and we start to get those US earnings coming through. Not the big night tonight, but we do get MasterCard 3M, and I think that's Domino's Pizza. Tomorrow, private sector credit retail sales here, business confidence. We get a quarterly report from Empol and Coles as well. That's right, it's quarterly sales. That'll be interesting considering the supermarket wars, not between each other. I mean, that's always going on, but between the supermarkets and the politicians, it seems, these days. And we get more of those quarterly production reports coming through. So an interesting day tomorrow. We've got, as per usual, a whole host of amazing guests coming up. We'll kick it off with Alfinity in the Global View at 9:45 a.m. Zach Riaz will join us for the open, get us across stocks that he's watching in market. And Frank Daniele from MA Financial as well. Oh gosh, the list goes on. Paul Bloxham, we'll ask him again if he's expecting to see an interest rate hike coming through, which, I dare say he will. And that's just before the noon hour when we'll have Michael Gable and Francesco Distratus joining us for the call. That's it for AusBiz live stream today. We hope you stick around to catch up on what you've missed. And please visit the website ausbiz.com.au for any interviews that you'd like to catch up with from today. There's a whole heap of great ones today, including one about trading and technical indicators. 4 companies, Ashley Glover from CMC Markets said are showing really positive momentum. I think the title's Get Macked. Go online, find it. We'll see you tomorrow.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.